Welcome, everyone. I
Thank
am
you.
really grateful for you all to be here. So folks are coming in and filtering in, and we'll let them in as they continue to arrive. And I am going to begin. Sort of, I'm always doing that little stall at the beginning so that so that folks can come in. Um, and while I'm stalling here, I want to just let folks know that this is being recorded. And so you can listen to it later. You can pass it on. And hopefully, if you have a friend or someone else you know who needs it, we'll make sure that that is sent out through our channels and is certainly readily accessible. And for those of you who are watching this as a recording, welcome as well. We are grateful for your time and attention. Uh, I am wanting to mention that, sorry, these beeps are coming in. Alyssa, if you can go to meeting settings and just turn off the noise when people enter, that'd be great. Um, I want to mention that, of course, putting things together is not just one individual, it is a team. And so while I am the president and CEO for the Alliance for Health Equity, it is my team who has helped put this together, and I'm grateful for their work and their efforts in helping us to put this on. This is our inaugural launch of our eConnect series, where we will be bringing different topics to the community and having an opportunity for Q&A and questions and response. There is at the top, for those of you who are live participants, at the top there is a Q&A function that you can see, which allows you to ask questions. We'll be able to answer some of those questions just typing, and then we'll bring them in as we're able to. The goal here is really for the community to have a sense of what tools are available to them as part of a trajectory of economic wellness and well-being, from tax returns all the way up through to financial planning. We want the community to understand that financial resources are accessible to everyone, even though they're not always communicated to everyone. So even if you do not have a large amount of wealth, wealth building is still an available tool for you, for your family, for your long-term generational wealth building. And it's not just something that's available to people who already have wealth. Similarly, tax preparation is something we're all required to do. There are different avenues for that, including free, which we'll talk about for folks who make $70,000 a year or less. You can get your taxes done for you for free. That's all part of a trajectory. And so we're really grateful for your presence here as we go through this conversation. I will also just really quickly mention that the way that this is set up, you'll see the presenters. You will not have the ability to unmute yourself and speak or to turn on your camera. So if you're trying to figure out how to get that on, you don't have to worry about it. If all you can participate with today is just quietly, passively listening, that's fine. You are welcome in the space and the way that you can show up today. And again, thank you all for attending this, our inaugural eConnect series. We will also have a companion podcast that we'll be launching that goes deeper after each topic into the issues that we discuss with one individual so that we can get deeper into these conversations. So thank you and welcome to my esteemed panelists here. Thank you for being part of our inaugural panel. I will mention, because it's important for me always to mention when I see there's various balance issues, that we do not have a woman representative on today's panel. And so I just want to acknowledge and state that. I also want to acknowledge and state that I do lead a team of primarily women. And so it is an important component of how we think about diversity. And today it is showing up in the preparation, less than it is showing up in the presentation. But I am not unaware of the fact that many of our participants that I'm already seeing are women and our panelists are not. So just wanted to acknowledge that that lack of diversity in that way today, and that you will continue to see different forms of diversity showing up as we have different conversations. So without any further ado, I will again say, my name is Kevin Ressler. I am the president and CEO for the Alliance for Health Equity. I'm grateful for your time and your presence today. I'm going to ask my panelists to introduce themselves one by one. I'll call you out, introduce yourself, and then I'll call the next one to keep it going. So I'm just going to go in the order that I see it on my screen. Top left, Bill Shaw. I would welcome you to unmute and introduce yourself.
Hey, good morning, Kevin. Thank you for this invitation. And I'm Bill Shaw, and the Executive Director of Life Transforming Ministries in Coatesville. We sponsor the Volunteer Income Tax Assistance outreach every year and been doing that for 20 years now. Glad to be here.
Thank you. And next works well because I know it's also part of that program. I have Michael Elliot. If you go ahead and introduce yourself.
Yes, hi. Thanks for inviting us to speak today. I'm a volunteer with Life Transforming Ministries. VITA, and I'm a tax preparer.
Thank you, Michael. And I will just mention when I worked at a previous organization, we oversaw the VITA program. It is incredibly important. Love to get into that later, but it is definitely a volunteers make that world go round. So thank you, Michael, for your efforts and your time there. I will hop over to Chi. If you could introduce yourself.
Uh, Thanks, Kev. I really appreciate the opportunity, and just not that I need to defend you. Let's just set this, for our participants and audience. You did invite a woman to be part of this. Unfortunately, she was unable to make it. It was a colleague of mine, so I'm sort of like stepping in on behalf of her. Just so everyone knows that you did in fact reach out to women as well. But anyway, name's Chuike, as you can see on the screen, but everyone knows me as either Chi or Chichi Owunwanne, and I am the Corporate Responsibility Officer and Community Relations Manager for KeyBank. And I cover 3 different markets, Western New York, where I currently sit, Rochester, New York, and our Eastern Pennsylvania market as well. Thank you.
Thank you. And last, but certainly not least, introducing Don Lyons. Please go ahead.
Good morning. Can you guys hear me? I just want to make sure okay, good. Good morning. Thank you. So my name is Don Lyons. I represent Bryn, Mawr in a wealth director capacity, which means essentially I manage a team of financial professionals to help manage clients' wealth and their overall assets. And I'm looking forward to really having a great conversation with you guys this morning, or you ladies this morning in particular.
Thank you so much, Don. So I'm going to start with you. Let's just hop right off there. Help us understand, like wealth management, wealth building, right? I spent most of my life as a person who had very little wealth, right? I came from a lower middle class family. Out of college, my first 2 years were full-time volunteer years, which I participated in and was paid at the poverty level and doing this nonprofit work. I thought, I got to prepare my taxes, but, someday I'll make enough money so that I can get a financial advisor. Can you help us understand what it is you do and how that's available to folks?
Yeah, so I think the first thing is wealth is not created instantaneously, right? It's created over time by small building blocks, right? So you take one step at a time by starting out saving small, and over time that goes into a huge nest egg. But I think really building wealth starts out with really understanding what financial planning is, which is getting a sense of your spending habits, right? So how much are you bringing in versus how much are you bringing out, right? That's your cash flow management. Once you've kind of mastered that element, that's your first building block of building wealth. Then we talk about other areas that add on to that, looking at your investments, life insurance, estate planning. So that's really what wealth management is managing all those elements of your financial affairs. And again, it's going to start out with really budgeting, right? Saving aggressively over time.
Thanks.
And of course,
yeah, go ahead.
Tax filing, tax understanding and filing is a very important component of that as well, of wealth building.
So I imagine, Michael, I'm a person who is low income, and when I go file my taxes, I get a refund. I get money coming back my way. There's not a whole lot that's being kept because of my income. So I come to you, you help me prepare my taxes. How does that play into wealth building, that moment?
Well, there are some very important things to think about in terms of your taxes. First of all, it's important if you have an employer who's withholding taxes, to make sure they're not over withholding. In other words, you'd be giving a free loan to the government if they're over withholding, and you can adjust that. Also, you want to make sure they're not under withholding, because you don't want to be subject to interest and penalties. And so it's either way. Also, there are some credits whereby even if you don't owe any taxes, you're actually going to get money back. So that's an important part of it as well. And it's important for tax planning to have an understanding of your taxes so you can plan, so you can look at how much cash flow you're going to have to give out for taxes. Now, this is really particularly important for independent contractors, which I think we're going to get into. because they have to really look at how much taxes they're paying throughout the year to the government.
Yeah, so Chi, let me jump over to you, and I'm thinking about banking, right? So I've got this wealth building component where I'm thinking about planning. I've got this tax moment that is helping me to make sure that I'm good with the government and good and the government's good with me. Right now, I've got some money. It's let's say well use a perfect example during the COVID-19 pandemic. There was a wonderful moment with regards to poverty where there was a child tax credit which removed instantaneously 40% of children in poverty in this country instantaneously were all of a sudden elevated out of poverty. Unfortunately, the government removed that tax credit and those folks fell right back in. But in that moment where that credit was coming back that Michael just referenced, I've got this money, I take it to my bank. What can I think about doing to begin this part of this process, this journey of wealth building? I show up at the teller, I've got $2,000. What are some things I can start to think about doing at the banking side that's going to help change my economic trajectory?
Yeah, Kev. I really do appreciate you lifting that up because it's I know this conversation is not about policy, but I think it's I would not feel okay with myself leaving this conversation having you raise that and not talk about or mentioning the word policy because a whole lot of a lot of the ways in which you can begin to actually solve problem, these seemingly intractable problems, is through policies. And we saw that with the example of the child tax credit that you just mentioned, where we decided to act on it through policy and then decided to take away that policy or rescind that policy, right? So anyway, getting back to your point, so you go to VITA, you get your taxes filed, and then you come into a bank, with a whole lot of cash in your hand. One of the ways that you begin to essentially just build wealth is through a household savings plan. Um, Now, assuming that you're not living paycheck to paycheck, and you've met your physiological needs, or talking about Maslow's hierarchy of needs, um, you can start putting together a savings plan, which requires a whole lot of discipline, but it can also be exciting. The excitement comes in the form of you identifying what it is that you want to save for, whether it's a down payment for a house, a car, or a nice vacation, right? So you start putting together a household plan, and part of putting together that household plans involves budgeting, right? So you put together a budget, and a budget can help you identify places in which you can cut back in order to save more, to eventually start incrementally building that wealth, as Donna had mentioned.
Yeah, I'd like
Thanks.
to add
Yeah, go.
that child tax credit still exists. And that's one of those tax credits that is, you can actually get money back depending on your situation, your income level, and so forth. So that's still there. It's $2,000 per child.
So yeah, and sorry, yeah, they changed some of the thresholds. The credit still exists. They changed some of the thresholds of who
You're
qualifies.
right. Okay.
Yeah. I think no, I appreciate the clarity because it's really important for folks to know that there's a variety of things, right? So she just mentioned if you have a mortgage, like if you get to that house, there's a tax credit component that thinks about owning a house. There's you mentioned already small business owners. There can be particular ways that people think about deductions and a variety of things. It's complicated, but at the end of the day, that's why we lean on other entities to help us with this. Now,
Right.
Bill, I want to think about this from an organizational standpoint. Your work at Life Transforming Ministries is varied. You're doing a whole variety of things. And VITA is one of the many programs that you provide that is targeted towards alleviating poverty for community members. Why is VITA important to Life Transforming Ministries? And give a little infomercial here, right? Like why should people be supporting this program? What's the return on investment for a donor, or someone who's going to interact with VITA?
Yeah, thank you. Thank you. There's a lot there, but I appreciate you touching on that note earlier with regard to the why, because it's been a few years now because we've met people like Michael who are wonderful volunteers and have kind of taken up the realm of doing the tax return, and we've got great partners in the corporate side of it, like Vanguard and the United Way of Chester Counties help us connect to people like Citadel. So we've got a lot more volunteers who can do the work. But when it started, I used to actually do tax returns myself. And that's because organizationally, our concern was for the person as a whole, not just the material needs, but obviously their emotional and their spiritual needs. And so as I look at this and kind of tie it into our earlier conversation, the tax period, the time when you do your tax return, is a great checkup. It's almost your annual checkup with your doctor, where you kind of do a diagnostic of all of these things. So when you're doing your tax return, you're kind of evaluating, well, where is my income coming from? As Michael said, be looking at my withholding and should I be adjusting my withholding? Am I even interested in this job anymore? Should I be thinking about a new job? How do I do that? Is there some education I can pursue? Healthcare is obviously a part of the tax return now. Is this the right healthcare plan for me, or should I be looking at a high deductible plan with a health savings account? Maybe that would work better for me. There's just so many matters that come up in the tax preparation process that I think we saw it strategically as a key point in people's lives to just kind of be there alongside of them and help them assess all of this, whether it's
Sorry.
through some of our own services. So like, for example, in Coatesville, we've got a higher education opportunity, but for many of our other partners, is there a way for folks to connect to some of these other resources and continue to build their lives using the tax return point of time as a check-in?
Thanks.
The other thing is that it puts money back into the community because there are people who get a refund, and some of the returns I prepare, they're getting a significant refund. It might be $900 or $1,000, and they may not otherwise know how to get that refund. They need assistance. We assist people in doing their taxes and getting their refund.
Yeah, so when I used to oversaw the running of the VITA program at United Way of Lancaster County, one of the things that we talked about was this is an economic investment program for a community. That so you're leaving money. You said earlier it's a loan to the government if your withholding is incorrect, but if you don't file at all, because well, I'm not really going to get anything back anyway.
Right.
It's actually the whole community benefits. And I have a question I know the answer to, but Michael, so let's imagine again, I have not filed my taxes in 3-4 years. I'm afraid. I don't want to
Right.
come and all of a sudden I'm going to be on the radar that I didn't
Right.
file my taxes if I only file this year. What that profile? I come in, I haven't filed taxes for a couple of years. What can VITA do for me?
Well, afraid or maybe embarrassed to come in, but we can go back 2 years and we can help you and file those taxes for you. If it's more than 2 years back, then the taxpayer has to go to the IRS. But we can assist with that, and we're here to help you. We're not going to like judge you or anything. We will do those taxes for you.
And just a reminder, I referenced it earlier, but how much money, like how poor do I have to be to use VITA services? Do I have to be completely poor here? What does it cost me to go to VITA?
It costs you nothing. We don't charge. The other thing is that I think you mentioned $70,000 income limit at the beginning. Well, that doesn't really apply. We will even go above that income. However, we have certain areas that are out of scope. Like if you have a complicated business, you have employees, that's out of scope. We're not allowed to do that. We have an agreement with the IRS, and they let us do certain things, but then there's areas where they get really complicated that we're not out of scope, and you're probably better off going to a professional tax preparer.
So if you're an individual and you're making household income, certainly of $70,000 or less, we're in that range. VITA can prepare your taxes for free.
Yes, exactly.
And
we do it for free.
I don't need to also go to H&R Block, or I don't need to also go to a CPA. If it's that category, it's comprehensive.
That's correct. And also, you may be charged a fair bit of money by the commercial tax preparers. So you're better off coming to us. We have training where we know how to do your taxes, and we're here to get you the credits that you are eligible for. And we're also here to make sure that you have the withholding correct. Now, it's important to say we're not financial planners under our contract with the IRS. There's a fine line there. So we can't give you financial planning advice, but we can suggest certain things in terms that relate to your taxes in terms of helping you with your financial planning.
And I think this
And
is
I like
where,
to, if you're okay with, I want to add to that, Michael, in terms
Yeah.
of financial planning. I think that's really the crux of what we're discussing here, right? Financial
Right.
planning is simply an evaluation process that looks at where you are today, where you want to be, and then ultimately how you get there. So it's where you are today, which is point A, where you want to be over time, which is point B, and again, how you get there. So it's an evaluation process. And we look at all those things when it comes to budgeting, saving, investing, life insurance, tax
Sure.
management, estate planning. All that goes in the realm of financial planning. That's where you want to start at the very basic level.
So thank you, and I was actually gonna use that jumping off to go to you, Don, because so now I've gone, this person that we're creating, I've gone to Michael, I've gotten my taxes done, and I do have a little bit of money. I've gone to my bank, right, and made sure that if I'm behind on a credit card bill or whatever, I've taken care of that. How much money do I need left to talk to a financial planner? Do I need $1,000? Do I need 2,000? What do I need to start financial planning? How much money do I need to be able to have that conversation?
Yeah, great. So it's really going to vary based on the financial planner, right? Some financial planners do charge a fee to start with them. Some charge a percentage of assets. There are some programs that offer pro bono financial planning. So what if I'm in your position here, I'm looking for the pro bono financial planning where financial companies will offer financial planning as a complement and a way to give back to the community at large. So again, I think the pro bono route is where folks want to take their efforts and interest to.
And
yeah, if I can interject
yeah,
here,
go ahead,
Jack,
please.
I think that's sort of like where, I think the bank may be the intermediary between Michael and Don, right? So you go to the bank and any one of our branch managers or personal bankers can help you put together a budget. And with that budget, you begin a savings plan. And hopefully by the time, even the personal banker may be able to identify, where you are and whether, your need actually supersedes what they're able to offer you, where, Don may be able to, step in. But I think going from Michael to a branch and saying, hey, I would love to start a household savings plan, can you help me? We are more than capable and more than willing to help put together a budget to set you on that trajectory.
Yeah, another
And I do
angle.
want and I do want to talk about the importance of goal setting. I think that's critical here, right? You want to talk about, what are your financial goals, and you want to segment them based on time frame. Short term, typically 1 year and less. Long term, typically 1 year and longer. So, for example, short term goal could be increasing my budget or enhancing my budget. Long term could be I want to save for my kids' college education, my education, perhaps retirement. So, I do think you want to take it from the standpoint of goal setting and start from there.
Absolutely. Go ahead, Michael.
Yeah, and of course, tax planning feeds into all that. Children's education, there are certain accounts you can set up to save taxes. Retirement, of course, as well. And another angle on this is if you're an independent contractor, then it's really important to understand your taxes because you're self-employed, you may need some equipment, supplies, you may need a loan from a bank. Well, the bank's going to look at your tax returns for the last few years, and that's very important to have all that in order, understand how your taxes are done, understand your income and expenses, and explain all that to the bank.
So we hear a lot of people talk about another big scary word, and I think that each of you probably have a component of conversation here, which is credit. Right? People talk a lot about credit, and credit is a giant mystery. I'm a board chair for a credit union, and even how we think about credit is sort of this mystery. Historically, let's roll back 20, 30 years. Before credit scores, we'll talk about those in a second, set credit scores aside, credit as a concept historically, until about 1985 when Freddie Mae and Fannie Mac started to change how they use credit scores for housing. Before that, you didn't have this same concept of credit scores. You had what were called the 5 C's of credit: character, capacity, capital, collateral, and conditions. I'll repeat those again. Character, like who you are and how trustworthy you are. Capacity, like what can you get to. Capital, how much cash you have, cash flow, those things. Collateral, what actual assets you own that can be a part of a package. And then the conditions, and those conditions of the loan, and those types of things. So when we think about those 5 C's of credit, which are supposed to be part of a credit score, we'll leave aside my criticisms on credit scores for the time being. But those 5 C's of credit are a component I think that people are often unaware of. And I want to start here with Chi, because I think the bank is where we often think of credit scores as having our largest impact. Now, tax prep obviously plays deeply into your credit score. You know, if you're behind on your taxes, that's going to be a challenge for you. And wealth building is also has a component of credit repair. But Chi, can you talk to us about what is credit, and I think how it begins at the bank? Because I do think that it really does begin at the bank more than almost any other place.
Yeah, great question. But let me just take one step back because I think this might be incredibly helpful for our audience. So there's something called the smart budgeting, or yeah, the smart savings system. Smart meaning the S is, specific. What are you saving for? M meaning measurable. How long will it take and how much money do you need to save? A, achievable. Obviously, you want to set goals that are achievable. And R, relevant. Why do you want to save for this thing? And then T, timely. I think Dom had mentioned that. So that's something that I think anyone can be able to use as a tool in order for you to get on that savings plan. And then in addition to that, one of the rules in terms of savings is, I think, is the 50-30-20 rule, where 50% is you spend on your needs, 30% on wants, and then 20% on savings. Now that I've gotten that out, because I think it's actually critical, I use that with whenever I do financial education for the community. So now going back to to your question regarding uh credit. I think there's several different ways you can build credit. For someone trying to start out, who started out trying to build credit or repair credit, banks have a variety of tools and that anyone can use in order to start building credit. For example, a variety of banks have what they call secured credit cards. So these are credit cards in which you may have to put up, some money down, and then you get a credit card. And then as you use that credit card, it's actually just drawing from the money that you've already put down. But the great thing about this is that all of those transactions is being reported to the credit bureau. And this is how you start to, build credit and reestablish credit. I'm not sure if that answered the question, but I'm willing to get into it a little bit deeper if necessary.
No, I think it's a good start. I'm not sure if anybody else wants to hop in here on sort of credit, this concept.
Yeah, I think I think in the essence, really, credit is your ability to borrow. That's really what it boils down to. And to your point, Kevin, years ago, I mean, there were times when a woman, for example, when she would apply for credit, she would have to have her husband vouch for her, or have someone of character validate her character to maybe a financial institution. So I think it's important to understand what credit is, which is, again, your ability to borrow. But credit is very important nowadays because it dictates a lot in terms of whether or not you can live in a certain area, right? We talk about home buying or even perhaps renting. Even right now, job requirements, oftentimes they will run your credit to get a sense of, are you even a good hire for us from a credit standpoint? Even now, when you look at insurance policies or car insurance, they're running your credit to get a sense of what they're going to charge you from a premium standpoint. So credit is very important. Again, it's your ability to borrow, and it speaks to a lot in terms of how you're able to progress throughout life.
Yeah, that's a great point, Don. Even your credit score as it relates to your ability to rent an apartment, let alone whether you can pay for it or not, because But I think, again, what was so wonderful for me to learn was that, regardless when I was doing tax returns, regardless of whether that person was earning two, three, four, $5,000 because they had had a health issue and couldn't work for the year, and hadn't earned a whole lot of money, but were getting a lot of money back because of the tax return, or whether they were at the top end, 50, 60, $70,000. These matters are essentially the same. You're still asking many of the same questions. It's just different circumstances within which you've got to apply them. So when we talk about finances like this, there's a great opportunity to reach, a very broad audience of people that this is a very important topic for them to, address regardless of their circumstances.
One of the reasons that I was able to do decently financially, even when I was lower income, is that when I was 16 years old, I got my driver's license and I wanted to buy a car. And I'd had a paper route, and then I got a job at CVS, and I had a little bit of money, but not a whole lot of money. But I'd saved about $3,000 to go buy this. Well, I wanted to buy a 1972 Jaguar X10, and my dad said, "Do you have any idea how much it costs to repair that thing?" Probably a bad idea. So we settled on a Honda Civic, and it was a manual. It was a solid car. Didn't have a whole lot of miles. I knew it was a good investment from a vehicle standpoint. So I went and I took my money out of the bank and I went to my dad and I said, "Let's go and look at this car, and we'll pay them the cash then and leave with the car." And my dad said, "Nope, you're going to put that money back in the bank." He said, "We're going to open a special account for you. And that account is you're not going to have any access to it. It's not going to be with part of your debit card or anything. And then you're going to get a loan." And I was like, "Why would I want to pay interest? I have the money for the car. I can buy the car." That was probably the best financial decision that I did, because at 16 years old, I knew that I wouldn't default on the loan. I had the cash and I was able to build credit because I had this loan. At 25, while doing a voluntary service year, I was able to buy my first house because my credit score was about as high as a person could have it in that kind of circumstance. And so thinking about how we're managing the money, on the banking side, even a small loan, like an auto loan, a lot of times they're afraid of debt, and understandably and reasonably so. But without debt, you can't build that credit. And so you've got these credit building credit cards. That's one component. But the next is the auto loan, and then the house, and then the business. All these various components here build over time, which I hope folks who are listening to this are hearing this again. It is a time consideration. And one of the rules of financial wealth building is you can never start too early. But I also want to mention from my own trajectory that I didn't have a 401k or any retirement planning until I was 30 years old. I had not understood that I was leaving money on the table when I didn't take the match for the companies that I worked for. 2%, 3%. Even if you can't financially make the whole 3%, can you make 1%? Right. And that was something I hadn't done. And I worked for a company, and I looked at my wife, who was pregnant at the time and about to have my first child, and I realized I needed to make different financial decisions. So I went to an independent wealth manager, and I was able to, the first thing I did, and we've heard these things, I just want to use this as a summary point. The first thing I did was I got a really small life insurance policy, and it didn't cost me a whole lot. It was like $15 or $20 a month, but it was something in case something happened. And that began my relationship with a wealth manager, so that when I would meet with them every year, and he'd say, "Did you get a raise this year?" And then all of a sudden we started saving $50 a month towards an independent retirement account. And then as I got more money from new increases, before I just immediately went and bought a new thing, or rented a new TV or did those things, it was, how are we thinking about tomorrow, today? 529 accounts for the kids' future education, life insurance, all these things that you're hearing. I want to just be very clear for those who are listening for themselves, or maybe you run an organization that you're doing some of this work with your folks. We do not need to be talking about all of a sudden saving $500 or $1,000 a month. It can really start small and manageable, but it changes the mindset. And I think that's an important component here, is you begin to think, oh, I'm going to make, a dollar an hour. I work full time. I'm going to make $1 an hour raise this year. Fantastic, right? And of course, we have those hierarchy of needs that she talked about earlier. But $1 an hour raise on a full-time job, that's $2,000. So can I carve off $10? Can I carve off $20 a month? Before I spend it all. So I just want to be very clear for folks that when we're talking about this, it's incredibly important for me to emphasize that this is not something that is only attainable. I waited too long, and I've now spent much of my life trying to fight lost compounding interest, right? I can't win back time. So now I have to put away twice as much money for half or for the same result when I'm at retirement age. And so, this is a thing you can, and maybe you take that $50 a month and $10 a month is for an account for your kid. So you're starting them well before when you started. And I just think that they want people to understand the accessibility of what we're talking about here. Our community, particularly communities of color, lower income communities, are too underbanked. They don't have, there's not enough of these financial plans that folks have, and that we need to, if we want to change the wealth of a community, we have to go person by person, but we have to change the way in which we're interacting with finances and understanding this is not a for them conversation. It's a for all of us conversation. Right. So I wanted to just digress there, a little bit. And I want to, so now I want to hop back to Don here. So you talked about plans, and you talked about these various components. How do you said some planners will charge a fee, some will take portion of assets. How do I begin looking? Like, we know VITA, like we know we can now go to Life Transforming Ministries, we can Google VITA, and we know that service is there. How do I figure out, where do I find a wealth manager? How, what are things I should be looking for?
Yeah, I think that's a really good question. I think there's a number of ways you can find a wealth management. Obviously, we all have access to Google, right? To put it bluntly. But the other way is really to speak to your financial institution, right? Who do you bank with? They're going to be your primary contact and conduit to provide you with or give you access to a financial planner. The other way is doing seminars such as these, right? Getting to know who those are in the community and reaching out to us individually. I think those are the primary ways in which you can establish relationships with financial planners.
Thanks. And similarly, Chi, so, I'm a credit union guy, I'll admit it. You're a bank. There's different forms of depository spaces. How do I figure out what makes sense for me when I'm going to go banking? I mean, I think we can be very clear, folks. If you're doing payday lending, you're in a bad spot. Like, find a bank and like, let's get those paychecks into banks, not into the cash. The cash guy on the corner or the Walmart check cashing. Like, let's get away from that. Banking. How do we figure out what works for me?
And stay away from Cash App. Sorry to digress. I know that's a big issue.
Thank you.
And I'm going to speak from personal experience.
Yes.
I have relatives and my family members who niece was applying for an apartment recently, and they wanted a bank statement. She was saying, "I only have money on my Cash App." And I'm like, "Listen, that's not a place to store money long term. That's simply a mechanism to send and receive money, but it should not be a store of value for you." So I do want to put it out there. That's a big one. It's having large balances on Cash App.
By the way, Cash App is not FDIC insured, is it?
No.
No, exactly.
No.
So yeah, so those payday lenders, they just lack so much in terms of being able to actually put you on a trajectory to be successful, to create a more secure financial future. As an example, Kev, you mentioned this earlier. I have a bank account and I have an automatic transfer that basically transfers $25 every paycheck into my kid's savings account, right? You can set that and it happens, every, bi-weekly. Payday lenders, they don't have those type of tools. Quite frankly, they're not interested in your financial security, beyond. No, I don't think that they even care at all. So that's not a tool that anyone within our community should be utilizing. Kev, your question is great. Go to a bank, start at a bank. I know sometimes, branch locations might be a challenge, but if you are infected and committed to a stronger and more secure financial future, if that branch is 25 minutes away and it requires public transportation, make that investment. Do that, because you would be able to talk to someone, have a conversation. They'll help you build a budget and set you on that financial trajectory that you want for yourself and your family. I can't overemphasize how important it is for you to sit face to face with someone and have a conversation. True story. I worked at a hedge fund, investment banking, for 10 years. And when I was ready to buy my first home, I reached out to my bank. It was in KeyBank at the time. And they sent me someone that was in Austin, Texas. And after two conversations, I realized that this was not for me. And this is someone who has been in finance for a long time. Like, no, this is one of the biggest purchases I'm ever going to make. You know, the biggest commitment. I need to have a face-to-face conversation. So I dropped that and found, a local bank to have that face-to-face conversation. So make that investment, take that 25-minute bus ride if you have to go sit at a branch, and they will talk you through and put together a plan for you free of charge. And obviously, as you begin to earn more money and you require more sophisticated, tools and guidance, then, Dom is there for you.
And some banks have financial planners within them. So
absolutely, I know.
seamless...
I'm trying to plug my friend here because he's right in front of me. But yes, banks, key banks, we all have financial planners beyond just the person that you see at the branches. So they can also connect you to those people as well. Have wealth management people, all those things. Banks have them. We have them.
So, Michael, jumping on that back a little bit to the sort of Cash App, Venmo, those things. I know that one reason a lot of folks have been using those is a tax dodge. I can pay my contractor, this way, that way. That's changing. Those are, is that this year that those are now actually taxed, or is that next year?
Well, they're supposed to report on what's called a 1099-K. So the contractor would get a tax form from the government with an amount on it. So that they're tightening that up. And of course, if you're a contractor, any cash that you receive for your services or any other goods or services that you receive for work, then you're supposed to report that. So that's being tightened up. And it makes it a bit difficult for the independent contractor because they could have these 1099s. There could be overlap in terms of reported income. So they need to look at those very closely because you have the credit card companies reporting and then you have the people you work for reporting. So that all needs to be sorted out.
Yeah, and similarly, we just want to throw over to crypto, which is booming and growing, and those things, and if you roll back 5-10 years, it was more Wild West than than it was 2 weeks ago. It has become Wild West again in the last, I don't know what happened in the last week, but just for folks that is those companies now are being required to, so you can't just be like, well, I'm just not going to tell and no one's going to know, whether it's Cash App, Venmo, whether it's your Coinbase or you're using Robinhood or whatever. Those companies in the past were able to say, it's the person's responsibility to report that. And that is no longer the case. And you don't want to end up in a circumstance where you're coming to Michael and finding out, actually, you owe a whole bunch more money than you thought you did because you last year or 2 years ago just thought you could skip out.
Right. And also the form that they fill out, there's a questionnaire that they fill out either before or when they come to us. And it asks about digital assets. And this year's questionnaire is emphasizing digital assets even more. So,
and if I may add just one additional point as far as all these things, instruments is concerned. If you are trying to build credit, unfortunately, there's a very narrow way to do it that excludes those other things. So, you may want to go to a bank and ask for a loan. So if you're dealing with just cash and you haven't built credit, I'm sorry, the bank is going to say to you, well, we've pulled your credit report, your credit history, and we don't see anything. So you may be driving around this fancy vehicle, which clearly you seem to have been able to afford, but this other thing that you may need, that you want us to finance, you don't have a credit history. So, we are not even going to touch it we're not going to touch you. We're not going to get into it. So I think the traditional method in terms of trying to build credit, those are still very legit, and you do have to go through those. So I would advise anyone who's using Cash App to, perhaps reconsider.
And the
So you
same thing
have,
applies to tax returns, as I mentioned before.
Mhm.
If you go to get a loan, well, you made income, where's your tax returns?
Right.
Mhm.
Yeah.
So what we're talking about a little bit here, right, is the difference between money itself and wealth.
Mhm.
Because
Right.
money is just the cash that you have. Wealth is part of a system, and it's part of a process that you have to engage with these different entities and systems. Now let's be honest about it. The system has been used historically to deny folks as much or more than it has been to invite folks. And so for some of our historically disenfranchised and disinherited communities, that system is not something that they feel is welcoming or for them. And I'll use one example to set this part of this conversation off. And now I'm going to talk a little bit about credit scores. So credit scores have been an instrument of exclusion. And by design, what credit scores actually evaluate is your wealth, right? That's that collateral component, and your ability to pay for things in the past. But your past behavior, so World War II, we built the middle class in the United States on the GI Bill coming out of
Mhm.
World War II. 1.5 million Black serving soldiers who were honorably discharged were denied access to the GI Bill. And that meant that they couldn't use the GI Bill to go to college. It meant they couldn't use the GI Bill to buy a house. But then it meant that their kids couldn't use their house to get collateralized for a student loan. Or you couldn't go to your parents and say, hey, Dad, can I use your house to collateralize my first house purchase? And so multiple generations have been denied equal access because our systems were designed from redlining to credit to these various components. Now, we're in a different world in 2025. But these tools still exist as a means of making decisions for these financial institutions. But the reality on the ground is that we still have less banks in lower income, less bank branches in lower income communities.
Mhm.
We still have the vestiges of that denied wealth building opportunity and all of these components. How can what is available for families? So you said hop on that bus, but also every bank has a digital sort of interface. So on the digital side, where do you all see this being beneficial? And Michael, I know that there's I don't know if they're still doing the My Free Taxes where folks can sort of self-fill their taxes. And I'd appreciate if you all can talk about access when it maybe isn't geographically convenient in a digital world.
Yeah.
I think it's a really good
Yeah.
point. I
I
think
mean,
historic. Oh, I'm sorry, Michael. No, I'm sorry. You go ahead.
Bill.
well,
I'm sorry,
I
but look, I didn't
mean,
want to
that kind of
talk you,
gets
Bill.
to the
Sorry.
root. Yeah, and that kind of gets to the root of why we exist in the fact that, and you can find out more about our VITA initiative at chestercountyfreetaxes.org and what Michael's doing. But we are essentially creating an alternative pathway for people to enter into a system that is on their side. We don't get paid by the number of tax returns, although sometimes we wish we did because it would bring more money in it for us, or by the amount of economic impact, which every year is $4 million or more dollars. Our incentives aren't that at all. We care about you. That's kind of the alternative kind of focus on here because only about 10% of our population that we serve, our customers take this opportunity, but we have a direct referral to the Financial Stability Center and the Career Link Center right in Chester County that is going to be giving you access to a financial navigator who can help walk you through all of this, regardless, especially for those who are the lowest income, who again are on your side and are helping you work through these matters. So I think that's kind of the first step we've taken is to say, look, these are big problems. but here's an alternative way that even those with the least amount of resources can get started with people who they can be assured are on their side.
That's right. And we're volunteers. So we do this because we want to do it. We love helping people. So it's a whole different relationship than if you went to a commercial organization to deal with your taxes.
Thanks, Don.
No, I was just going to say in terms of the availability, and I think the availability is more prevalent now than it has been, despite the fact that you don't have as many physical locations, right? I think digitally, you have more online banking apps, more institutions are online now, so it is easier for folks to access banking products online. Think about this venue we're having right now. Historically, 20 years ago, we'd have to meet in person, right? Now we are here in our fingertips, really, some of us in the comfort of our own home. So I think it speaks to the power of the internet, technology, et cetera, in terms of how we're able to really help bridge at least some portions of that gap.
I want to slide to you, and I want to add just a little bit of a component for your question. Is there's this question of digital access, but then also, so why shouldn't I just go to a fintech? Why shouldn't I go to SoFi or these like internet only banking? Can you talk about access and how it still has that component of connectivity?
Yeah, so I'm someone who is always going to double down on the ability to just have a face-to-face conversation. I know some people have a love relationship with humans. I love humans and I love us, especially folks from our community that have for centuries and generations. There's this trust gap with financial institutions. So from my perspective, is it easier to build trust with a financial institution through just technology, faceless people, or through face-to-face conversation? So I will always go to that face-to-face conversation, so, simply because perhaps it might this might just be a tell of my own personal character, that I just prefer to just engage with humans versus a faceless person. So branches are always going to be there as part of the CRA 1977 act that passed, that banks have to meet the credit needs of all communities, including low to moderate income communities. So there has to be branches close by, because otherwise, they would not be upholding their obligations to that CRA federal regulation. So the fintechs and all these other tools that are out there, they are great, right? I think they actually might be better for people who already might have a lower trust bar, with financial institutions. But for people who have a high trust bar with financial institutions, it may be best for you to begin to bridge or break down those barriers through in-person, interpersonal conversations and contacts.
Thank you. All right, so I'm always cognizant of time and wanting to respect people's time. So I want us to just take a moment here. This is the self-propelling infomercial for yourself, your institution, your industry, whatever it is. We're just going to go around and let you all have that opportunity to say whatever it is that you feel you need or want to say about your portion of this trajectory that we have, financial wellness. And I'll go ahead and I'll start the way I went with intro. So we'll go to you, Bill, then Michael, then she, then Don. You're on mute, Bill. There's always one.
Yes,
There's always one.
thank you. Yeah, it's usually me. Yeah, like she, in person's better. You can't mute me. Uh, but yeah, leave plenty of time for my colleagues here. You heard me. If you want to find out more about VITA, ChesterCountyFreeTaxes.org. Sites will open next week. Come and see people like Michael and others who, at these customer service centers all throughout Chester County, who really are looking for your best interests first. And we do not just the state, not just the federal, but we do state and local taxes, so the full gamut. And again, just are thankful for this opportunity to connect with people who are looking for a safe, reliable, and accurate way to get their taxes done, and check in on their overall financial health for the year. Thanks.
Yeah. Well, thanks for the opportunity. There, personal income taxes can be intimidating. There are exceptions to the exceptions. So if you haven't been in that world, then you're not quite sure where to start. And Chester County freetaxes.org is a place where you can get the list of things you need to gather to bring to us. And also that sheet I mentioned that you fill out when you come to see us or before you come to see us, that also give you an idea of the other things you need to gather. And we'll help you. You contact us, we'll help you. You say you need this or that. So we're really here to help. And as I mentioned before, also to get in terms of financial um, planning and financial stability, we're here to get you all the credits um, that you um, that you qualify for. And as I mentioned, sometimes you'll get money back. So that's really really important. So we thank you very much for the opportunity. So
So thank you so much, Kev, for putting this on. I think this is incredible information that is being shared with the community. Um, the topic of financial stability, from my perspective, it's a needed conversation. It's always a needed conversation, especially for, our communities, communities that have often been, left out of wealth creation, wealth building systems and strategies. So financial stability to me is something that I think that we should all continue to just speak about. And one of the ways you create financial stability is through education, bridging that knowledge gap. By bridging that knowledge gap, that financial knowledge gap, you're solving for a variety of things. One, it allows people to make, informed decisions, that can set them on a more sturdier financial future. You're avoiding debt. One of the lessons or quote that I took from my years in investment banking, I was talking to the CFO, and he said something that resonated and has stuck with me all these years. And that quote is, "Those who understand interest earn it; those who don't pay it." Like, just think about that, right? And that has been a thing that has stuck with me all these years. So you get to make better informed decisions, through financial education. You avoid debt, you prepare for emergencies, which can also help reduce your stress level and anxiety around, your life. Reducing stress and anxiety over finances, and you feel empowered to take control of your financial future and make decisions that align with your values and goals. So that's what financial stability is all about. And at KeyBank, we pride ourselves on that. And as a matter of fact, we rolled out an initiative last year that we're rolling out through our, engaging community partners, and it's called Money, Me, and Key. Money, Me, and Key is a financial empowerment curriculum that we deliver to communities. And we have certified financial educators, who go through certification, and they lead these efforts in the communities that they're in. So if anyone is interested in partnering with us for Money, Me, and Key, please feel free to reach out. Just on the personal finances alone, there are 13 different topics, smart budgeting, credit 101, and the likes. And then there's business modules, and then there's home ownership module. Money, Me, and Key. We would love to partner with anyone who's interested. Thanks again, Kev.
Yeah, this was an absolute pleasure. I think more than anything else, obviously, it's about learning and educating ourselves individually and collectively. I think at the end of the day, more important than education is the application of education, right? That's going to be more important than anything else. So the hope is that you guys walked away with at least some nugget of information that you can use and implement. And I always tell folks that a little goes a long way. So if you can start small, right, and build over time, you'll be in a better position long term. So I thank you for this opportunity.
Thank you so much, fellas. I really appreciate the information that you have shared. I want to let everybody know that our next eConnects conversation is going to be March 26th, same time, 11 to noon. The topic's going to be healthcare access. And as many of you in the community know, we're so excited as we continue to roll out the change of our provider for the first floor of the Brandywine Center. We are really excited. We're going to see increased services and increased quality of services. We just did our assessments and decided the community really needed new opportunity to have a new provider coming in here and be transformative. And as we think of from the Alliance perspective about social determinants of health. There's not just the fact that you have services, which is what we're talking about in the upcoming one, but there's also issues of financial health. There's also issues of whether or not you live in safe housing, and these are the topics that we're going to be bringing into this space. And we hope that you'll join us. We hope that you'll share the recordings. We hope that you'll share what's coming up next with other community members. Really do appreciate the time and the attention that you've been able to devote to this. Hope that you have taken something and can take something forward from it. Really appreciate everyone. Thank you so much, and we will catch you next time.